let's get right into this breakdown, guys. So we have to understand basic market structure to understand why this move played out the way that it did. The bulls have been in control for over 6 months now, guys, since last year, November. So I've mainly been paying attention to long opportunities. If we look at this price structure, or should I say market structure, on the monthly time frame, this, in my eyes, guys, is an inverted head and shoulders. It may not even look like it to your eyes, but with time and experience, you will see what I see, which is why you have to understand this area right here was very crucial, because it's the 1800 key level. That is a very, very important price point for this pair. Now, when I remove this and I show you guys my drawings, you're going to notice that I had that area marked up, and this area was beautifully respected this year. So at this low, or should I say at this higher low, I placed my fibs to the top of this wick, and I was expecting price to potentially go down from there to the 1900 area, and then we were going to look for longs and make all-time highs. But that didn't happen, and the market gave us what it gave us, and sometimes you just got to make the most of it and take what you can get from it. So on the daily time frame, like I had posted earlier this week, guys, price was in an ascending triangle. It was squeezing to the upside, and the beautiful thing about this is that we can see the bulls were gaining momentum consistently, and the bears were also consistently losing momentum. You can see that clearly by all of these wicks to the downside. Look at all of the wicks that there are here going down. They're all going down, but they never broke 1980. They never succeeded to break 1980 on a daily time frame. Now, my bias, or should I say my bias, was to the upside, but I was worried that if we broke this 1975 key level, that we were most likely going to take a crap all the way down to 1955 and proceed down to potentially 1900. But that didn't happen this week, guys. What ended up happening was very, very beautiful. When we actually look at it on the lower time frames, we can see where we actually caught the entry around the area of the 1982 level. This was more or less the candle that we had entered on, right? And we had our stops around 1978, right below the wick. Right below the wick of the previous hourly candle, which was a stop loss of about 40 pips. And our take profit was about more or less 380 pips. 380 pips, guys. I had stacked up about three entries in total in this trade, and it practically flew straight to take profit. It took a little bit over a day, but what I want you guys to take note of is I told my best friend, shout out to Dylan, by the way, that if price broke 2015, that we were going to fly to 2040. Reason being is because, as we can see in this ascending triangle, in this range, there's a lot of noise. But as soon as 2015 is broken, the only thing after that is 2040, as we can see right around this area. So the only thing that's here, between here and here, is nothing. It's literally air. So price went straight up, guys. Literally, practically almost parabolic. And I personally was not expecting price to hit 2066 today, guys. We practically almost solidified and manifested the prediction that I had called earlier this week and almost hit all-time highs before the end of the week. Now, it's not the end of the week yet. And potentially we could see, after the major news release on Friday, price push up and solidify that prediction. But here's where it gets interesting, guys. After we make all-time highs, I'm expecting the dollar to start to make a shift and the Fed is going to surprise us. And personally, it's going to be sell-off season. For the whole summer, everything is going to bleed, just like it did last year. And if it doesn't, that means gold is going to most likely hit all-time highs throughout the entire summer. So guys, the potential of opportunities is limitless. All you guys have to do is keep working on your craft. Remember, guys, this was 6 years in the making, 6 years of failure, 6 years of losses, 6 years of, and over 6 figures of money invested into myself as far as knowledge, accounts, challenges, and time, guys. Time is money. You have to understand, this didn't happen overnight. This trade by itself secured 6 figures. 6 years ago, a normal day was a negative $200-300 day. 6 years later, today, a 6-figure day is a normal day. And this is why, guys, you must never, ever give up on your goals, dreams, aspirations, and desires. And this is what I'm going to leave you with, guys. Personally, I don't like where the economy is going as far as the U.S. economic policy is concerned. I personally feel that we are at a point in history where we are going to see something happen that we've never seen in our entire existence. So the opportunities that you make the most of, hold on to your cash, guys. Hold on to your cash. And definitely be smart with the next moves you're going to make, because it may be the only moves you have left on the chessboard before you're checkmated by life if you don't move correctly. And that'll be it, guys. I hope you guys were able to take something from it, from this little breakdown, to add to your trading, whether it's fundamentals or technicals, okay? Have a blessed week. Stay prosperous. Trade smart. Stay safe. And hold on to that fucking money, guys.